Hi everyone, let's go through the high time frame, medium time frame and low time frame bullish and bearish scenarios. Starting with the high time frame bullish scenario where this wave A, B, C is not yet finished and we expect more higher prices in this final wave C. Currently that would mean that we are in a wave 4. So the green count over here is a 1, 2, 3, then a 4 and then eventually a 5 ending in somewhere around the common wave target or the rare wave C target. Now wave 4 in this case is then an expanded flat, which is a 3-wave structure down followed by a 3-wave structure up inside the 1.38 and 1.236 Fibonacci that you pull from the high of 3 to the low of A. And then eventually after this move, we go down to finish wave C and therefore wave 4 as well, somewhere inside this white target box. Now the invalidation of this scenario is at about 20.3k because once price goes below the 0.5 Fibonacci, it tends not to be a wave 4. So if this is then, if price goes down over here, then wave 4 can be invalidated and therefore now the invalidation I have is at about 20.3k. Now this is the bullish scenario. The bearish scenario in this case is that the end of wave C has already been made because the requirement for wave C, the most important one, is that we take the high of A in an expanded flat, being an A, B, C. Now this wave C over here, the peaks that we generated the past couple of days or at least few days ago, they took the high of wave A. So in that sense, this is legit. And then if we look at the final wave in this wave C, so from wave 4 to wave 5, you can think of an ending diagonal, with this then being a wave 1, 2, 3, 4, 5, before then eventually finding downside and actually going to prices below 15.4k where we started the impulse. So below 15.5, 15.4k. So this is the bearish scenario. The bearish scenario is invalidated once we take this high once again. So once we take this high at 25.3k, that means this bearish scenario is going to be invalidated. Now in the medium time frame, I have 2 bullish scenarios and 1 bearish scenario. Now the first bullish scenario I like to show you is the following, which is a WXY. So then in this case, and let me also activate the high time frame bullish count because these are in relationship to one another. We have the high of this green wave 3 over here. This then being a W, an X and a Y. And that would finish wave A. So then this is A, followed then by a B and then a C to the downside. So in this case, we're looking for upside in some kind of 3-wave structure to get us wave B in this expanded flat, an ABC. And after reaching this area of B, we would then move to the downside to finish wave C. Now locally, with this medium time frame count, the invalidation is taking the low over here at 22.7k, because if this is indeed a W, then a 3-wave X and then a 3-wave Y, if this is then indeed a 3-wave Y and this is the low of Y and we're looking for upside, I don't really like to see this low being taken. So that is why the invalidation of this scenario is at 22.7k. The second bullish scenario, of course, kind of in relationship with the previous bullish scenario, but it just it takes a bit more time because it's yet unfinished, is that this is a WXY XZ, which means that in this X, we're looking for another 3-wave structure, eventually another structure in the Z, before then going up for wave B in the expanded flat. So in this case, if I remove the brush, there we go. In this case, we have a WXYXZ in the A. So then this is wave A. Then we have wave B in a 3-wave structure, followed by then wave C to the downside to finish wave 4. And then again, look for more upside to finish wave C in the common wave C target between 27.7k and about 37k or 34k, sorry. Now the bearish scenario on this medium time frame is that wave B and wave C are already in based on what I just showed you with the ending diagonal. And then we could count something like this. So then this being a 1, 2, and then this being another well, in this case 1 2. So it's a 1 2 1 2 scenario, which then should lead to quite an impulsive move to the downside in a wave 3. So this is the bearish scenario. Now this is invalidated the moment we take the high of this green wave 2, because if this is indeed a 1 2 1 2, then this wave 2 is not allowed to go above the origin of wave 1, which in this case is over here. So the invalidation is at 24.6k for the bearish scenario that I now highlighted on my chart right here. Now if we go to the low time frame, I have one bearish and I have one bullish scenario. And I like to start with the bullish scenario that you see over here. And let me put the target boxes on as well, because I do like to show you. This is why I have target boxes, and I will make a video about it in the future on how I make these target boxes. But in general, they're very well respected. As you can see here, these are the same boxes I had this morning, the other videos today on my chart. Very well respected resistance, very well respected support. And locally with the bullish count, you can see I changed from a 1 2 3 4 5 scenario to now this being an ABC. I already mentioned in a previous video that the retracement here of this now called a wave B is very, very shallow, because that retracement is the 236 retracement. And if I put that on, it's the upper white line that you see on the chart right now, this one. And for a wave 2, that is mega shallow. So it's more likely than in that case to be a wave B. And that's why I now have this as an ABC, followed by an A, 3 wave B, and then this impulsive, explosive move to the downside in a wave C on the lower time frame, which so far stopped exactly on the target of a wave C. So the target of a wave C is between the 1.618 trend-based fib extension, which I pulled from the start of A to the low of A to then the high of wave B. And as you can see, it has been so far very well respected. And another way to find the area of or target area for wave C is that wave C tends to at least wick or stop in between this area. So in between the trend-based fib extension 1.618 and the Fibonacci 1.618. And as you can see, we did have some wicks in this area, and that is absolutely fine, respected with the 1.618. So this is the bullish scenario at the moment, where I would then be looking for another move to the upside, and this being an A, a B, followed then by a C, which can be a 3-wave structure or a 5-wave structure, with targets being the 1-to-1 at 24.1k. However, my preferred target would be to reach the target box at the top, which is in between 24.6k and 24.8k, basically, if we would go up that high and we actually move further up. Now the invalidation is taking the lows over here at 22.7k. So, and then finally in this bullish scenario, to make it even more bullish, is that if we have this, if we have this A, B, C in blue, then this could be an A, green, followed by a B, and then followed by a C. And that C wave would then also complete the B wave of the higher time frame scenario. So then this is an A, this is the B, and then we go down for the C in wave 4. Now the bearish scenario on the low time frame is the following, that again, we already had this ending diagonal over here. And then eventually we have a 1, 2, 1, 2, 3. So that is basically the same as my medium time frame count that I have, with the invalidation being at 24.9k. So I hope you enjoyed this video about the high time frame, medium time frame, and the low time frame bullish and bearish scenarios with their invalidation. The next video will be tomorrow morning at 7 a.m. CET, Central East European Time. If you enjoyed this type of content, please let me know in the comment section, as well as like the video. It would really help my channel, and I'd like to thank you everyone for your support and watching this video as well. You are the guys that I make these videos for. So thanks for watching, and I hope to see you at the next one. Bye bye.